Welcome to the COB channel. Today we are going to discuss cost systems. Cost systems are used to assign costs to products or services. There are two basic types: job costing and process costing. Job costing systems are used when a company produces many products or services that are distinct from one another. These cost objects may be manufactured to order, specialized, or customized to the customer specifications. Because each cost object is different, each would require a different amount of resources. Hence, this system accumulates costs separately for each product or service. This system uses a job cost sheet to account for its costs. On the other hand, process costing systems are used when a company produces many units of a single product. These units are indistinguishable and identical, which enables the assignment of the same average cost per unit. This system uses a cost of production report to account for its costs. So for the rest of the discussion, we will be focusing on job order costing. So as mentioned earlier, this system uses a job cost sheet. This is used to record and accumulate costs assigned to a specific job. This will include details on its direct and indirect costs. The materials requisition record will have information on the direct materials used, while the labor timesheet will have information on the direct labor consumed. The predetermined overhead rate or budgeted manufacturing overhead rate is used to apply overhead to jobs before the period begins. Because actual indirect costs will not be known until the end of the period, this is used to forecast total manufacturing costs and to determine a job selling price. So the formula for this is the estimated annual indirect costs divided by the estimated annual quantity of allocation base. An allocation base is the cost driver, or something that causes the overhead. If the allocation base is in weights such as pounds or kilos, then the POHR will be in units. If the allocation base is a cost like in dollars or in pesos, then the POHR will be a percentage. So you need to estimate the level of production, the allocation base, and then you will arrive at your overhead applied, which is the POHR multiplied by the actual activity, which is the actual amount of your allocation base that you incurred. So let's have an example. Manufacturing overhead is allocated using a POHR based on direct labor costs. The budget for next year is 300,000 pesos overhead costs and 200,000 pesos direct labor costs. For the first month, 30,000 pesos was incurred for direct labor. How much is the applied overhead? So the POHR is the estimated annual indirect costs, which is 300,000, divided by the estimated annual quantity of allocation base, which is the direct labor costs of 200,000. Hence, the POHR is 150%. Since the allocation base is a cost, our POHR will be a percentage. Now, our applied overhead will be the POHR of 150% multiplied by the actual activity of 30,000, which will give us 45,000 pesos. Since the applied overhead uses a rate based on estimates, then it is likely that this will not be equal to the actual overhead. If the actual is greater than the applied, then you have under-applied overhead. If the actual is less than the applied, then you have over-applied overhead. The simplest method of treating this is closing it to the cost of goods sold account. This is usually done if the difference is immaterial. So let's have an example. Actual overhead costs are 180,000 pesos, while applied overhead amounted to 150,000 pesos. Prepare the journal entry to close the over or under-applied overhead. Because the actual is greater than the applied, we have an under-applied overhead of 30,000 pesos. The journal entry for this will be to debit cost of goods sold and credit manufacturing overhead. For 30,000 pesos. Here's a tip. So the debit side of the overhead account is the actual costs, while the credit side is the applied costs. So in our example, 180,000 will be on the left, while 150,000 will be on the right. To make this equal, we must add 30,000 pesos to the right side, which is the applied side. Hence, manufacturing overhead is credited in our journal entry. To sum up the flow of costs, the direct materials and direct labor costs from the requisition of materials record and labor timesheet respectively are transferred to the job cost sheet. The indirect materials, indirect labor costs, and other overhead charges are transferred to the overhead account. The amount is then applied using the POHR, which is then transferred to the job cost sheet. Now let's move on to the preparation of financial reports or schedules. There are three important components: the cost of goods manufactured, the cost of goods sold, and the income statement. Let's first break down the cost of goods manufactured by starting with the cost of direct materials used. To get the direct materials used, you need to add the beginning inventory to the purchases and then deduct the ending inventory. Take note that if the material inventory is composed of direct and indirect materials, then you must deduct the indirect materials used to get the direct materials used. You then add the direct materials used to the direct manufacturing labor and manufacturing overhead to get the total manufacturing costs. The total manufacturing costs will then be added to the beginning work in process to get the total manufacturing costs to account for. The ending work in process is then deducted to finally get the cost of goods manufactured. To solve for the cost of goods sold, you simply add the beginning finished goods inventory to the cost of goods manufactured and then deduct the ending inventory for finished goods. If any, add the under-applied overhead or deduct the over-applied overhead. The cost of goods sold is then deducted from the sales to get the gross profit. From here, you deduct the selling and administrative expenses to arrive at the net income. Let us now solve the following problems. Company A had 39,000 pesos in its beginning materials inventory. By the end of the period, it decreased by 30,000 pesos. If Company A purchased a total of 82,000 pesos worth of materials, how much were used? So we know that the beginning inventory is 39,000. The purchases are 82,000. And the ending inventory is 39,000 less 30,000, so it's 9,000. From here, we can solve for the direct materials used. Which is 112,000 pesos. If total manufacturing costs are 217,000 pesos and the total prime costs are 153,000 pesos, how much is the manufacturing overhead? As discussed in our previous video, prime costs are composed of direct materials and direct labor. From that, we know that deducting the prime costs from the total manufacturing costs will give us the manufacturing overhead. So total manufacturing costs is 217,000, while prime costs are 153,000. So the manufacturing overhead will be 64,000 pesos. If the beginning work in process is 21.5 times greater than the ending work in process that costs 40,000 pesos, and the cost of goods manufactured is 10,000 pesos greater than the beginning work in process, how much is the total manufacturing costs? So to get the beginning work in process, we multiply 21.5 and the ending work in process, which is 40,000 pesos. So the beginning work in process will be 860,000. The total manufacturing costs is unknown. We know that the ending work in process is 40,000 pesos. And the cost of goods manufactured will be a total of 870,000, which is 860,000 from the beginning inventory plus 10,000. Based on this, the total manufacturing costs will be 50,000 pesos. Company B had no beginning finished goods. If the cost of goods manufactured is 870,000 pesos and the cost of goods sold is 780,000 pesos, how much is the ending finished goods inventory? Since we know that the ending finished goods is deducted from the cost of goods manufactured to arrive at the cost of goods sold, we can work our way back by deducting the cost of goods manufactured of 870,000 to the cost of goods sold of 780,000. The beginning finished goods will not affect our computation because it is equal to 0. Hence, our ending finished goods will be equal to 90,000 pesos. And that ends our video. Thank you so much for watching. If you have any comments, suggestions, requests, and feedback, leave them down in the comment section below. Don't forget to like and subscribe.